The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Happy Monday. My goodness me, you've got a busy week, everybody. How exciting. You're watching Squawk Box with Karen Cho and myself, Steve Sedgwick, and these are your headlines. Well, the dollar just dipping a tad and futures hovering around the flat line. Well, this as a surprise poll puts Harris ahead in the Republican-leaning state of Iowa, whilst final national polling points to a dead heat.
After all we have been through together, we stand on the verge of the 4 greatest years in American history.
We have an opportunity in this election to finally turn the page on a decade of politics driven by fear and division.
Berkshire Hathaway continuing to sell down its stakes in Apple and Bank of America, boosting the Warren Buffett-led firm's cash pile to a mere $325 billion.
German government infighting deepens after Finance Minister Christian Lindner's bombshell economic manifesto puts him at odds with his coalition partners, triggering late Sunday talks with Chancellor Olaf Scholz. And oil jumps as OPEC and its allies agree to a 1-month delay to output hikes, while TotalEnergies CEO Patrick Pouyanné tells CNBC the sector is facing some difficulties.
Volatility in our industry is quite I would say part of the game. Refining margins are much lower today. They are under pressure. They are a little better, but still under pressure.
Very good morning to you. How are you?
Good morning. Very well, thank you.
Good. We've both been on our travels all over the place, actually, before we haven't seen each other for a while. Look, there is so much going on this week. We have so many exciting data points and earnings points as well. But there is no doubt about it. Your excitement, having come back from DC, my excitement as well, is palpable about the US election. It doesn't matter whether you're Republican or Democrat or you're unaligned or you're purple, you don't know, or you're European. It is the most exciting event on the planet politically, historically. And yet the irony is, for most of our viewers, it doesn't actually affect their portfolios. I mean, we pride ourselves on being, up to speed on the ramifications on a minutiae basis of everything that these two candidates and their parties represent. But the evidence of history, and we can go into this in a lot more detail later on as well, it's unbelievable. We are so excited. We can't stop talking about it. We are unbelievably, palpably on tenterhooks about it. But actually, regardless of whether it's Republican or Democrat, it don't matter.
It depends on your time frame, though. And we've obviously seen very big gyrations in stock market trades on the back of elections. And of course, when Trump was elected the first time, we certainly saw it intraday. So if you're looking at short-term performance, then it can matter.
Oh, yeah, you're spot on. But quite frankly, here's the other little secret. Most day traders, you don't make money. It's a fact. Most day traders do not make money over a longer time. They might on the day on a Trump-Harris. But the fact of the matter is, day trading's a fool's game for 90% of people who do it. And you know it out there as well, by the way.
What is delicious about this week, though, is that we have lots of other big events. We've got a Fed meeting, and it's a live meeting. We've got China, and in terms of whether we get big stimulus, and there's a very wide range in that stimulus the market is looking for. So let's just see what comes through there.
And whether the Germans will have the Germans will have a government. It's just a question whether it's effective or not. In the meantime, Ryanair numbers have hit the wires, and I was supposed to do those about 2.5 minutes ago, so I'll do them now. 1.79 billion euros of after-tax profits for the first half. We're going to call that in line, aren't we? The company poll of analysts said for 1.8, 1.79, 1.8. But we know that fares are under pressure. But there is a line here, and I think you might be interested in this, that forward booking suggests that Q3 demand is strong, and this being the key here. And the decline in pricing appears to be moderating. Too early to provide meaningful full year 25 after-tax profit guidance. 700 million euros in share buyback complete in August, over 30% of 800 million euros follow-on done. Look, the shares you can see here, it's tough out there, no doubt about it. They are significantly off their lows. Why don't we we speak to Neil Sorahan, the CFO, at 6:15 GMT. That is the first on CNBC. So Karen is absolutely right. There are some extraordinary moves going on in Forex, in the bond market, of course the equity market, on the back of the hopes and aspirations, the fears about equity players and everyone else has about the election. But again, over a longer term period, does it matter? I'm going to leave that question hanging there. But in the short term, these markets remain fascinating, Karen.
Yeah, let's come to the behaviours, because don't forget it was earnings week last week and a lot of big technology names in particular on the ticket. It was Amazon that moved the market to the upside for the Dow, the S&P and the Nasdaq, the big driver behind those moves that you saw. So in terms of the gains, you can see decent to the upside, particularly on the Nasdaq, and it was those FANG Plus stocks on the front foot last week, and in some ways at the expense of the semiconductors. So if you look at technology, it was not a strong area of the market last week, thanks to those big chip stocks moving into reverse. So it was really that FANG Plus stocks, that old playbook that came back into the market last week. That said, it was patchy across the FANG stocks, but by overall ETF performance, it was one of the better performers. In terms of treasuries, now we've been gliding higher on these yields over the course of the last number of weeks. That is at the short end, it's at the long end as well, and perhaps again concern about no matter who takes the White House, that we're talking about more debt, and 4.38% is what we're seeing on the 10-year, reflection of some of those concerns. The short end, where we had the non-farm payrolls report, and what a wildcard that was, with the unemployment rate remaining firm, but some big drops on the headline number, and of course revisions on prior months as well. So the 2-year though was still perched in the green. Dollar trade. There have been some gyrations ahead of the US election, and some of that very strong Trump dollar premium that was coming into the markets in recent weeks just starting to abate. So you can see morning session, there are other trades that have got it. It's euro, it's sterling that are making some gains versus the greenback. So they are very much up. 0.6 on euro dollar, 0.5% on sterling, and dollar also losing steam versus the Japanese yen, down a fairly decent 0.75% to the Swissy. Dollar also on the back foot. WTI and Brent gold, the commodities complex, WTI and Brent moving around OPEC and OPEC Plus manoeuvring, 1.8 up on WTI and Brent. Gold prices a tad firm, a big election risk week, no doubt supportive factor for gold, Steve.
Right, okay, I mean, there's so much where we're trying to dissect, and the data on the payroll, I mean, what do you make from it? I kind of almost think we have to almost not worry about it for once, because there was so much going on that distorted the numbers, and we'll talk about this as well. But they shocked investors, it says here on Friday. But did they shock any of you, really? You've had two massive hurricanes. You've got one of the biggest companies in the United States with strikes going on. The fact that the number was lower than some of you expected out there on the random number generator, I would have been more shocked if the unemployment rate had moved aggressively. It didn't. It didn't move a jot. But this is what happened. Non-farm payrolls, apparently, shocked some investors, not me, coming in at just 12,000 for the month of October, almost 90% below market expectations of an increase of 113,000. It's this on the back of downward revisions in August and September. That's more interesting. The downward revisions, you can rely on those, really, because, as I say, two hurricanes plus a Boeing strike. What did we expect? Right, this is interesting. On the corporate front, Berkshire Hathaway's, do we say Berkshire or Berkshire? I think we say Berkshire. It's only people from Berkshire who say Berkshire.
That's an English
a county in United Kingdom, in case anyone's worried. Berkshire Hathaway's cash pile surged to more than $325 billion in the third quarter as the firm sold significant portions of stakes in Apple and Bank of America. The Warren Buffett-led firm ditched around a quarter of its stake in the world's most valuable company in the period, making it the fourth consecutive quarter that it has cut its holdings. Operating margins at Berkshire came in at just over $10 billion for the quarter, down around 6% on the year due to weak insurance underwriting. This was the eighth consecutive quarter in which the company has been a net seller of stocks, which is extraordinary. Not for me to question Warren Buffett, but when you've had record markets and he's sitting on a record level of cash, absolutely extraordinary. Again, we'll talk about that one a bit later on. The US election is top of the agenda this week. I am genuinely excited, but markets, well, there's bracing, as Karen was pointing out, for a slew of economic events. Fed officials will meet from Wednesday for the central bank's next decision. And it's possible we won't know who has won the race for the president by the time that decision crosses the wires Thursday. Could be months. Could be. There's a historical precedent out there somewhere, I can assure you. Markets are pricing in a quarter-point cut, according to CME's Fed Watch tool.
There's central bank action on this side of the pond too, with the Bank of England also expected to cut rates by 25 basis points Thursday. This amid rising gilt yields since the budget last Wednesday. Deutsche Bank says the market reaction is orders of magnitude lower than after the Truss Kwarteng mini budget in 2022. Rabobank warned of what it calls post-Truss stress disorder, but says the sell-off is overdone. Plus, China's top lawmakers gather in Beijing from today, expected to sign off on a stimulus package worth trillions of yuan. The National People's Congress meeting is set to conclude Friday, with economists at Goldman, Nomura and Macquarie eyeing sovereign bond issuance to replenish bank capital and an increase in local government bond sales. So let's just pick up on a couple of these themes. Of course, there's the Buffett story, and you just spoke about the markets. Don't forget, we've just come off from what was a frothy October. So if you look at the levels where Buffett also eased back on some of the portfolio, it was the end of September, which is pretty much where we're trading now, as we've given back some of those gains. So, what exactly did he miss out? A little bit of the icing on the cake, I would say. But I think the positioning, tactical positioning perhaps around technology now. And don't forget, we had Apple last week, one of the big reporters. It was not exactly shoot the lights out kind of stuff. So I think what we're getting now is not exactly great trading markets. We've got so much noise, not just around earnings, but also around, of course, the US election. And to me, what's fascinating is the polling now that looked like it was going to be a red sweep, according to some of the numbers. And you can see that reversal that's taken place, even though I think we all thought it was going to be a very, very tight race. The positioning had really gone in some ways towards the Republicans in some areas. So that is now coming off in terms of the dollar trade today as we get set up for the week.
I got to be honest, I like you, I spent all my time just reading, and I love reading, and I love learning this stuff. And you read 10 pieces about the election, you get 11 different views. But the fact of the matter is, you go back to Reagan. Look at Bush, look at the other Bush, look at Obama. Whoever is in charge of the White House, deficits and debt to GDP over time have pretty much gone up. Neither the Republicans or the Democrats this term round can say we are fiscal hawks. We are going to get the debt to GDP significantly below 100%. We are going to run a surplus. Well, they're not going to run a surplus. It's just a question of the size of the deficit as well. So, the dollar oscillation, the bond market concerns, they should be concerned, because whoever's in the White House, it's going to be tough. In terms of the equity market, there's a lot of copy out there that actually very few US presidents, you can look at George Bush, but most US presidents see stock markets rising double digit over the term that they spend in the White House as well. Very few US presidents have presided since Jimmy Carter over a stock market that hasn't gone up double digits. So it's kind of, that was my point. And you look at, for instance, let's just take a high beta sector as well, the energy sector. The energy sector under Biden, which, we're going to have a green policy, we're going to do this, we're going to do this, we're going to be harder on the oil majors and what have you. The oil majors has been one of the best sectors to own under a Biden presidency. So, work that one out, viewer.
To me, what was fascinating over the past week or so was a discussion around the tariffs that could be brought in force again if it is a Trump presidency. And the reality is we're talking about tariffs that could be somewhat inflationary. And the market here was really very much getting past that narrative of rising pricing pressures. And I think even with the data that we saw from the non-farm payrolls Friday, this would be a market that might be starting to get more dovish about further rate cuts on the back of that data point. But they're simply not, because what we're talking about here are two presidents, two presidential options that could mean even higher debt and higher spending. So I think the reality is that we didn't get much of a market reaction on the non-farm payrolls because the market is cautious around the election. Yeah. So I think there still are implications, even as we talk about whether it's a big swing one way or the other in terms of portfolio reactions.
I mean, I've spent most of my last few days looking at Sun Belt versus Rust Belt, looking at the size of the college votes. Now we're looking at, because of the Des Moines Register this weekend, looking at whether Iowa college votes could actually change the race to 270 out of a total 538 electoral college votes. And actually, because Iowa's only got 6 electoral college votes, it's exciting, it's interesting, but does it change the maths? Not massively as well. One more thing on just what you said about protectionism. Again, there's some great copy out there. I think it was, Richard Bernstein was writing in the FT over the last couple of days. How about this one? I'll just take this one paragraph because I think it sums up markets versus what we're thinking markets do. US multinationals and emerging markets also outperform US small caps during the Trump presidency, which he emphasized protectionism. So he emphasizes protectionism And yet during that period when he's supposed to be protecting US mid and small caps, the TNCs, the MNCs, call them whatever you like, the big international companies that thrive on globalization and emerging markets which might suffer because Trump was being more protectionist, they both outperformed small caps during the Trump presidency. It just shows you the madness of what we think happens because of the politicians tell us, and actually what really happens in the market.
And you could say the same thing about the polls. This poll over the weekend that you referenced from Iowa, very, very respected pollster, but was it an outlier? I think that's what the market's been trying to gauge. Are we setting up for some sort of wild card outcome from the election, or is it going to be very, very split? Does this poll on the weekend suggest something?
The wild card is one of the parties actually pulls away from the very, very tight race we've got.
Exactly, that's the wild card. Coming up on the show, we'll be joined by the Ryanair CFO, as the airline reports an 18% dip in first half profit and says it's too early to provide meaningful guidance for next year. That is coming up after the break. Plus, that shock poll delivers Harris a boost as national polls show a neck and neck race ahead of the US presidential election tomorrow. We will bring you more on what to expect later this hour. And our election coverage ramps up today. Don't miss our interview with the former US ambassador to the European Union, Anthony Gardner. That is at 8:30 GMT.
Welcome back to the show. Ryanair has posted an 18% drop in first half profit, coming in just under 1.8 billion euros. That's in line with expectations. Now, this on the back of weaker fares, which were down 10% on the year, but the budget carrier says those price declines appear to be moderating and that the bookings for the third quarter have started off strongly. Well, a good point to check in with Neil Sorahan, who is the CFO of Ryanair. Neil, lovely to see you.
Pleasure to be here.
We can go through the numbers, or we can ask you really, more importantly, how does it feel at the moment as well? Because, I mean, I think that sentence bringing you in summed it up. It's been tougher, but actually maybe some of that is abating.
Yeah, as you said at the start of it, we are starting to see, fares are very strong, moderating the declines in fares. Bookings are very strong. We had a 9% increase in the first half of the year, 115 million passengers, which is a record for us. We had a tough Q1, didn't have Easter in there. We've seen interest rates higher for longer. Interest rates are starting to come down. Consumers, I think, are getting a little bit more confident in the market. The OTA issue that we had seems to be washing its way through. We're hopeful now that, fares will start to moderate somewhat, and the declines in Q3 will be well down on the 15% in Q1, the 7% in Q2, and hopefully somewhere under 5% in Q3.
Yeah, there's 100 things, Karen, I can ask you about the third-party sellers of your product, the plane delays as well, the budget. I don't know where to start. Really. What for you is the biggest issue at the moment?
Well, the biggest issue for me at the moment is clearly trying to get aircraft. So I'm very hopeful that we'll see some kind of resolution to the strike in Seattle tonight. I know Labour are voting later on today, so we'll be watching that very carefully. We've got 2 aircraft in, and so far this quarter we were due to get 11 between now and Christmas. We'll probably see.
You were due to get 11.
Due to get 11.
You might get a couple more.
I don't think we'll see any more this side of Christmas.
That's and if you replicate across the industry, that is crazy level of delays, isn't it?
It is huge. It's huge. But hopefully, as I said, we'll see this get sorted out. Capacity is usually constrained in the market, which is positive really when you start looking out a year or two. We're now slowing down our growth moderately into next summer. We had planned to grow to about 215 million passengers next year. We're now planning on the base of 210, which makes sense. We've been overcrewed for the last couple of summers with delays. We've been overscheduled, so we're planning on the basis of that. I'm hopeful that Kelly, Ortberg, that Stephanie Pope, they get the result tonight, and that the machine can start to ramp up again and start delivering aircraft.
So you're not going to get as many aircraft as you anticipated, yet fares are also starting to moderate. So if you had received the same allocation of aircraft, what would that have meant for average fares? Would they be even lower?
Well, typically in the winter, we take aircraft in, but we don't necessarily fly them. It's a slower time of the year for us. So anything we would have got through now is more for next summer rather than for the current
But the same
quarters.
question applies for next summer. If you had all the aircraft and if you still take delivery, what does that mean for airfares? Would they go
We
even
don't know.
lower?
I mean, I can't give you guidance into Q4, but if we look at the market at the moment, capacity is hugely constrained. We've got the Pratt & Whitney engine issue, which is impacting Airbus operators, continuing, not going to be resolved anytime soon. Boeing are behind on their orders. We've got M&A continuing in Europe. So I think capacity is going to be constrained for a number of years to come, which would look like fares. There's probably more risk to the upside than the downside, given where capacity is going to go.
Can I ask you about the behaviours you're seeing with the consumer? Because I was talking to a central bank governor the other week and who was saying to me, look, we don't know whether we've now fundamentally seen a change in the consumer. Young people don't want to have assets as much. They're renting everything or subscribing to everything, which means they want to keep some cash aside so they can travel. Yeah. We don't know whether that's just a feature for now, still on the back of the pandemic, or whether it's something that sticks around, has implications for central bank policy. When you say fares are moderating, do you think we're now past the peak of that behaviour where we do actually have a genuine change back to what it used to look like with previous economic cycles?
Well, people are travelling in massive numbers. We had 20.5 million passengers alone in August. The desire to travel is huge. Now, our average fare in the first half of the year was €52, so it's not exactly outside.
Must have missed that one. Sorry, was that with or without paying for oxygen? I mean, sorry, paying for bags and what have you on the plane.
Well, you would have paid maybe another €20 for the ancillary products on board
and the rest.
On board the aircraft. So the wonderful teas and paninis that we have on board, and you should always take them, Steve.
Can you still do the scratch cards?
We do the scratch cards, yeah. Charities do very well out of that. But the demand is huge, and as we said in the release, Q3 demand remains very high. Fares are moderating. So I think people are starting to see interest rates coming down. They're feeling a bit more confident into next year. And hopefully that's going to be positive from the fares moving forward.
Do you want to walk us through the operating costs, plus 8%,
Yep.
the level you reported today? What are the factors at play here and how does that look down the line?
Yeah, I was actually very pleased with the operating costs because it grew at a slower rate than the increase in traffic. Traffic was up 9%, so we did see some labour inflation coming through. We put a number of productivity pay increases in place last year. We've seen our traffic control charges go up. Ironically, our traffic control charges up 21% in the last few years, and the service has probably fallen by about that. We've had the impact of the Boeing delivery delays, and that's clearly had an impact on us as well. But offsetting that is that we've a very good hedging in place this year. So we've seen year-on-year savings on our fuel bill coming through, offsetting that, and then we got some modest compensation from Boeing, although that goes nowhere close to compensating us for the 5 million lost passengers that we have in the full year.
I'm just looking up the price of a panini on the flight, but I mean, plus it depends if you go for the meal deal. Really, I guess is the point here.
Meal deal's great,
but
Steve.
it's a couple of pound more than the extra £2 air passenger duty as well. Was that peak, Michael, this week in relation to the UK budget, where Rachel Reeves ups the air passenger duty by a couple of pounds per economy flight as well? Michael says we're going to cut thousands of flights. See, I love listening to what you guys have to say, and I know it's a great back and forth. But was that a slight overreaction? We're going to cut thousands of flights for a £2 increase in air passenger duty?
I just set out a picture there, Steve, where capacity is constrained.
Yeah.
We've got more airports chasing Ryanair aircraft, and we actually have enough aircraft to fill the need. At the same time, we've got the Swedish cutting their passenger duty taxes. We've got the Hungarians cutting. We've got regions in Italy cutting back.
So no problem then.
So we
want to fly from the UK.
Well, the reality is, if prices are going up in the UK, and the government said they were going to try and stimulate growth, this is a backward step. We have more people chasing capacity than we have. And unfortunately, particularly for the regions, maybe not so much for London, but for the regions here in the UK, there is a very real risk now that traffic is going to go elsewhere.
Did you see ramifications from the budget beyond that in terms of how the consumer holds up? I mean, more in the minimum wage, but that said, there was talk that the budget could actually be inflationary, which then limits the ability of the Bank of England to cut rates. And we know that there are a lot of rate-sensitive customers out there, and you've referenced it yourself. Yep. So, as we sum it up, was the budget on balance a negative one for you in terms of the customer?
Well, I think from a growth perspective, and I know the APD doesn't kick in until April 2026, but from a growth perspective, it wasn't a good move for an island nation on the periphery of Europe, not unlike Ireland, which needs flow in and out to try and keep traffic in the country. So I think that was negative. Yes, we did see some increases in social insurance and otherwise. We'll absorb those and we'll work through. But I think for the regions in particular, it wasn't a great budget from a travel perspective.
For the sake of balance, they're setting up for an election too on the other side in a matter of weeks. We don't know what the exact date is yet, I believe. But what do you make of any potential outcome for the airline sector? Is there anything we should be watching?
Look, we'll watch this space. I've no particular views one way or another.
In terms of the broader sector, I'm always fascinated to know if price declines are moderating, what that means about what the rest of your rivals are suffering. I get it, and look, we've had the privilege of speaking to you and Michael for, I must have been 20 years I've been speaking to Michael as well, about the broader environment, about the idiocy of some of the business models out there as well, about how they all get their lease aircraft, paint their livery on, and there's a lot of them at the top of the market. How does the broader market feel on that front at the moment with your direct rivals?
Well, I look at a lot of my rivals, and the cost advantage that we have between ourselves and them, it's just widening. We're in the happy position. We've got a very strong balance sheet, Steve. We're funding ourselves out of cash, and at the same time our competitors are taking on extremely expensive leases, very expensive debt. And that gap is just widening. I think we're seeing a little bit more discipline in putting capacity into the market because, again, they don't have the balance sheet to hedge, so they're wary about what's going to happen on that.
They can't get the inventory either.
And they can't get the inventory, but the incremental cost of putting an aircraft into the market has got very expensive for them. So I think that, again, is going to play into capacity be constrained in Europe for some time to come. The M&A story is going to play out. We're already seeing ITA, formerly Alitalia, been taken over by Lufthansa. TAP is going up for sale in the next number of months. Capacity will come out on the back of that. So I think we're getting slowly towards the US model where there'll be maybe 3 or 4 large players operating maybe 70-80% of the market.
I've got to let you go, but I'm just a very quick one. Are you in accord with your pilots and cabin crew at the moment? I mean, there's been a few episodes, we talked about Boeing as well. Are we on smoother flow at the moment between the relations between you and your employees?
We've had a very good summer, despite ATC being difficult. We've had a very good summer with our people. We've got multi-year contracts in place, and we've got great growth and promotion prospects. So I think we give a very good offering, and that seems to be going well at the moment.
And I think the answer is €10.
Well, one of us better keep us on time, so I guess I'll take this. Neil, thank
€10
you very much
for the panini meal deal.
10.
Yeah, if you had a couple of euros, you get a beer in there as well.
Must be a good panini.
It's really well. You get your Pringles and your coffee as well, so it's wonderful.
Other interesting crisps are available.
Neil, thank you so much for joining us. Neil Sarahan with us, the CFO of Ryanair. Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.